Hello and welcome back to the Squirrels. Today, I want to talk to you all about sin tax. Yes, you know where you heard that? The new GST slabs that have just been announced. Every time you will now buy a pack of cigarettes, a bottle of soda, or a drink at the bar, that extra price pinch called sin tax. But where did this idea come from and what's its economic impact? Let's break it down for you with some history, numbers, and a bit of fun. Now, sin taxes aren't some modern invention. More than 4,000 years back, ancient Egypt was taxing alcohol for revenues. In medieval Europe, too, kings taxed wine and beer. The term sin tax came later in the 19th and 20th centuries when governments started targeting sinful habits like smoking, drinking, and even gambling. The idea apparently to discourage unhealthy choices but make money at the same time. So what exactly is the economic logic behind sin tax? Well, economists point to two things. One, they reduce consumption of harmful stuff. Research shows a 10% price increase on cigarettes can cut its demand by 5 to 7% in high-income countries, and even more in places like India. For sugary drinks, a similar price hike can drop consumption by up to 10%. Theoretically, it can help fight diseases like diabetes or lung cancer. Second, sin taxes are a cash cow for any government. In 2023, the United States collected well over $12 billion from tobacco taxes alone. In the Philippines, sin tax revenue funds universal health care covering millions of people. India too has taxes on tobacco and alcohol to support schools and hospitals. That also explains why governments don't end up banning these things outrightly, choosing to tax them heavily instead. But then, sin tax is not always good. Several economists point out that it hits the poorest the most because a much larger proportion of their small income is spent to buy these so-called sin goods. Sin taxes are now an accepted reality. The World Health Organization is estimating over 100 countries to have sin tax. India taxes sugary drinks and gutka to tackle obesity and oral cancer. Some of the highest sin taxes are in fact in developed world like the US and UK. Which brings me to this point. Is our government linking being rich to being sinful? Well, let me explain. It is one thing to have more tax on tobacco and fizzy drinks, but to slot things like cars, business travel, luxury motorcycles in the sin tax category seems to be counter to logic. Where on one hand, you want the country to grow economically, but then on the other, you want to curb spending at the highest level. Can a developing economy like India really afford to do that? Well, what do you make out of all the questions that I have raised? You can tell us what you think in our comment section and you can subscribe to our YouTube channel. Thanks so much for watching.